Okay. Peter Rose, Longwood Currency Trading. Getting mired in the crap. What's that all about? Okay, you want to know? Here we go. All right. Here's the Beau Dog. Do you know what the Beau Dog did today? Beau, tell your fans what you did today. You rolled around in the moose shit. And Sue had to come home and wash you down. So, what does that have to do with currency trading? Stick with me. I need a cup of coffee. Let's go in and we'll get a cup of coffee and get on with this. Let's get started. Getting mired in the crap. You know, Beau didn't mean to get rolling around in the moose shit. That's just what dogs do. And what do traders do? What do we do as traders? We get mired in the shit of trading. We get so wrapped up in the thought of trading that we do what we think we're supposed to do, which is to trade. All right. So the worst thing you can do as a trader is trade because you think you need to trade. A lot of times trading is sitting on your hands. A lot of times trading is not even sitting in front of the your desktop application or looking at your phone. God forbid you should be trading on your phone. If you're trading on your phone, go shoot yourself. Yeah, man, just don't. It'd be cheaper to bury you than the money that you're going to lose for doing silly things like trading on your phone. Anyway, that's just my opinion. And not to shoot yourself. You know what I mean. God, there's so many stupid people in the world. You don't have to trade to make money. If you're not trading, you're not losing any money. So you're making money. Because when you lose money, you not only lose the money, but you lose the time that it takes you to make that money back. Not trading is some of the most important trading time that you will ever spend in your trading career. If you find yourself needing to trade every day, then you're trading for the wrong reason. You're trading for the money. Oh, okay, we're all trading for the money. But look, you're on a swimming team and you swim a lot, but you don't swim all the time. You eat, you sleep, you watch a movie, you chit-chat with friends. You're not swimming. You need to be diverse in your interests and what you do with your life and not get so wrapped up in trading, because when you run into your statistical 6 losing trades in a row, or you just do stupid shit and you let the trade run and run and run and you're hundreds and hundreds and hundreds, if not tens of thousands of dollars behind, you're going to become despondent. And what are you going to do? You've defined yourself by being a trader. You have to start early on with the most important part of trading, which is there a trade, a viable trade, to be made? Now, it's my position that you shouldn't be trading more than one currency pair as a retail trader, unless you're really, really experienced, and then you might trade 5. Or you might trade, I don't know, oil, gold, the S&P, maybe a couple of currency pairs. Certainly no more than 5. But I've been looking at currency markets since 2007, and I've had an active live account since 2012, and I trade one currency pair. I'm very happy with that. My attention is focused on that one pair, and I can get up in the morning and I can look at that pair and I can go, there doesn't appear to be an environment that I'd want to get involved in a trade. And so I'll just have my coffee and go about my day. I won't trade. I'll leave the trading platform open because you know as well as I do that things can change, and particularly as a day trader, you know, you've got, if you're on a 5-minute chart, you've got 12 decisions an hour, 12 opportunities an hour to decide whether you're going to go in and do something. But with your experience, you can look at the setup and what's going on, and you look at the economic calendar for what's the news and all that sort of stuff that could cause anomalies in the price action away from normal price action. And you have to have some experience to understand what normal price action is versus price action caused by some anomaly that may or may not continue in that form. So to look at the chart in the morning and say, oh, there's nothing there, that's a great thing. Go do something else. Have a cup of coffee. And then you can come back to it in a couple hours because you've had 24 5-minute bars go by. Lots of things can change in 24 bars, right? And, oh, I missed a trade. Really? You're going to beat yourself up over that? As the gamblers say, the dice are being thrown somewhere in the world all the time. All the time. If you ever find yourself saying that you missed a trade, you are in serious need of evaluating your psychological makeup to be a trader. You don't miss a trade. You don't miss an opportunity. You don't say, oh, geez, if I could have made... You don't do that. That's stupid. You sit down to trade, you're ready to trade, you're ready to go. What are you going to do? Force a trade? Are you going to do what I've called in many of my videos anticipatory trades? Are you going to do that? Because those just lead to doom. You know, if you trip off a stop on an anticipatory trade, you're so entrenched in your conviction that it's there, you're going to re-enter, and you're going to get stopped, and you're going to re-enter, and you're going to get stopped, and then you're going to say, what the fuck, this thing keeps coming back, I won't stop next time. And then it goes 200 pips against you. And you're wondering, I got margin out, what the hell happened? I know you don't want to hear about psychology because all the videos that I put up that talk about psychology, nobody watches them. Nobody reads about the psychology of trading, but that's one of the most important critical aspects of your trading. Either you're psychologically fit to trade or you're not. And that's not only to be a trader to start with, but also on a daily basis, on an hourly basis. You know, you sit there and you do a few trades and things are going really good for you, and you start talking about taking that last, I'll take one more trade, I'll make another couple of $100. Really? That's what you're going to do? You're going to risk the $300 or $400 that you made for the day to take a runner on another 200? That'll make you feel real good. Believe me, I've faced that. It's very difficult. You work very hard and you make a couple of $100 for the day, or $300 a day, or $3,000, or whatever level of trader you're at, $30, you know? You work very hard for that. And then you're going to want to take that next trade because you want to make $50 more. And you don't analyze the position, the price action position well enough with a level, clear, empty head of opinions, and you look at that with opinion, and you find that next trade, and you get stopped. Except this time you've set your stop far out because, well, you know, you got to give the price room to breathe, right? And what happens to the couple of $100 that you made for the day? Gone. So you lose $200 to make another $50. Yeah, the other 50 would have been nice, or 500 or 5,000 or whatever it's going to be. But when you get into situations like that, you lose your perspective on the viability of the trade. And the reason you're doing that is because you're trading all the time. You're sitting in front of the computer screen wanting to trade. I can want to trade But I don't have to be in front of the computer screen and act on that when there's nothing there, or where I create some fantasy out of the depths of my stupid mind. I've lost tens of thousands of dollars doing that. So you do whatever you want to do, but I'm just telling you that out of the morass of crap that you can step into, why don't you step back from that and choose not to step into anything that could get you into a jam? The fact that you take the time to do good trade entry analysis, and that you have a really good feeling about things and you're ready to go, and that you make that trade is no guarantee that it's going to go in your favor. It's 50-50 jump, regardless of what you think the probability of the trend continuing or the price continuing. As soon as you hit that button, you're in a 50-50 jump ball situation. That next price move is going to go up or it's going to go down. It's going to go up maybe a quarter of a pip or pin bar at 200 pips. Or it could go down a quarter of a pip and spike down 50 pips. You don't know what that next thing is. Based on your best considerations, you could get stopped. And if you don't set a stop, that thing could go so far against you that you go, oh, it'll come back. They don't come back. If you have enough money and you can hold out and your position isn't too big, you might be able to come back. But that's like the martingale betting system. You know, in a martingale betting system, you bet 1 and you lose it. So then you bet 2 and you lose it. And then you bet 4 and then you bet 8 and then you bet 16. And the idea is that eventually you'll win and you'll make that initial 1 that you lost back. Isn't that stupid? You're going to bet $350 to make back the 1? You say that can't happen. I made that happen throwing craps in Las Vegas one time. My next bet was $650 to win back 5. I passed. It was a good thing I did, because that bet would have lost. My next bet at $1,200 would have lost, and my next bet at $2,400 would have lost for $5. How far can you go? And in fact, the $1,200 level was the limit for the table. I wouldn't have been able to make that $1,200 bet. I would have only been able to make a $600 bet. And so if I would have won the 600, I mean, I lost it. So I couldn't make the next one, right? So I'm out $651. It's crazy. You have to really, I mean, that's why those of you that are younger and getting into this trading thing, and you have less than a couple of years experience, you haven't seen everything that you need to see, and you haven't read all the stuff that you need to read in order to understand how difficult things are. That's why you take driver's ed. So they can say, oh, by the way, if your tire blows out, your car's going to go out of control, and you better get that car pulled over to the side of the road as fast as you can, or you're going to run your rim right to the nothing, and it's going to cost you $500 to put a new tire on there. Oh, what are you going to do? You're going to just drive around like most people when they were learning how to drive 40, 50 years ago? And you just drive around and boom, the tire goes out. Oh, I'll just drive 2 miles down and get this tire changed at the gas station. We have so much information available to us today that it's a shame that so much of that information in currency trading is poorly presented. And much of it is flat wrong. And yet that's the stuff that you see and that you're attracted to, because you don't have enough background information to filter out what's possible and what's not possible. And because the what's not possible seems to be easy and make great sense, that's the guy that you read his book, or that's the videos that you watch. I go to all these different sites. Guys have 17,000 subscribers or whatever to their channel. And there's some of them that are just leading you right into the slaughter pen with the advice that they're giving. Countless sites. I just laugh. And most of the sites don't really tell you anything. They only paint you a picture and make suggestions. And then you got to figure out what to do. But because you're trying to chase their dream, you're going to make the wrong choices, the wrong decisions. You're going to wonder up why you're flatlined. Be very careful about throwing yourself into the shit, because it's very difficult to get washed off. Peter Rose, Longwood Currency Trading. Have a great day. Have a great trading day. And don't trade every day. Don't trade every hour. Be calm. Sip your coffee and have fun.